This conference will now be recorded.
All right, good afternoon, everybody. This is Greg Morton. It is Sunday, June 26, 2022, and then this is the weekend update for the Greenville Eastside IBD group and the Stockyard Meetup group for Canslim Growth Stock investors. As always, educational purposes only, not recommending stocks or securities to buy or sell. All investing has substantial risk of big losses, so we want to learn first and only then invest. So we're going to look at the M factor. We're going to talk about what we saw this past week, constructive action, destructive action, kind of put a hint in there, sort of a smoke and mirrors week, which I'll talk about. Look at a couple charts and then talk about our monthly meetings. So the M factor, as always, most important letter for Canslim investors. Per O'Neill and IBD, we want to interpret, not predict. We want to look at three things: the action of leaders. Okay, we're seeing some life showing up now, at least in the medical groups, the solar groups, and a little bit in the Chinese EV groups. Actions of stocks owned, still don't have much in the GTP group teaching portfolio, just one medical and one China EV stock. And then market pulse, distribution day count, price and volume on the indexes, and the coloring book. So last weekend I said, hey, let's take a look at the horror show, scratch that out. Not quite as bad this weekend, so let's go look at those. Start with the NASDAQ. This is the daily chart. So we had a shortened week. We just had 4 days. Thursday kind of looked like it was going to be a follow-through day. It was up 1.62%, so it was up enough, not real powerful, but over 1.25. But then the volume came in slightly lighter, and then Friday looks great, up 3.34%, massive volume. The caveat is all the volume came in the last couple minutes on the annual Russell rebalancing of the Russell indexes. So the volume was actually lagging all day. So the only reason it was a follow-through day was because of the Russell rebalancing. So it still was a follow-through day by definition. It would have been nice if the volume had been there all day. I kind of think of it sort of like a gold medal earned with steroids or performance enhancing drugs, or a Lance Armstrong cycling victory. It's got an asterisk beside it because there was a major flaw underlying it. So we'll see how it goes. We can clean this up, take the mark-offs off. So you can sort of see we're in that. Here was one leg, here's the second leg, and now we're working on the third leg down. Maybe this is the bottom, or maybe we're going to get a fourth leg down. We'll just have to watch and see. Constructively, did come back above the 10 and 21 days. Moving average lines are still pretty much headed down. Still a lot of work to do. Put the markups back on. So we're still, in the range of 27, 28% down, even right at the close that happened on Friday. And we're about 7 months or 7.25 months off the peak. S&P 500, sort of similar waves down, coming back up. That was 25, so we're right at bear market territory still, and retaking the 21. So it'll be interesting to see if they hold the 21 this week. NYSE didn't even retake the 21. Here's 20% off, so it stopped just short of an official bear market. Dow, 20% off, it also stopped short. So if we get another leg down, we would think it would go down through that. Russell trying to take back the 21-day, same thing, got the legs down, and it's right there about 27% off, probably battling the 21-day. S&P 600 looks similar. So still a lot of work ahead. This coming week, I think will be telling and will be important. If we look at the coloring book, so this would have been followed through day number 6 on the NASDAQ, number 5 on the S&P 500, and number 5 on the Dow. So we'll watch those. IBD did go back to confirmed uptrend. I still think we're in a power outage. I don't know if they moved their exposure account. I shouldn't have put that in there yet. I got to read what Justin writes, so I'll take that back out. Was War Day 121. on Friday, and then this week we do have a full week, but then Friday is the Friday before a holiday on Monday for July 4th. And then we have EPS season starting to ramp up too. So there's still a lot of red here. I had 4 buying days, 12 selling days, and that would have stayed at 4 and 12 even when we count Friday as a buying day. So because we dropped a red day. Yep. So this is still 4/12. Put that in there. So still a seller dominated tape, I think. So we'll keep an eye on that. And let's go back over here. Look at the group teaching portfolio. So it only has 2 partial positions. What size are those? One of them's 30% and then a 50% in Halo. So, and that was on Thursday that looked like it was going to be a follow-through day and didn't really add anything on Friday. So we're only 12.4% invested, still down 11.6% for the year. And been a pretty bad month this month, and that really ends the month. Friday was the last trading Friday, so we'll start over because next Friday will be July 1st, so we'll really count next week as July. So just not much going on, not much exposure. See what this market does to pull us back in. So key observation, MMTS are still all red, but they're close to changing. 10-day moving average line moves up, will be better. IBD went to confirmed uptrend. I just have an asterisk on that follow through day like I talked about. Window of opportunity still closed, but close to opening. We did have high distribution with clustering. That's not too far in the past, so we're keeping an eye on it. Distribution day count, 5 on each index. IBD's not counting. Well, they'll start counting again now, but they wiped it to 0, but I'll still keep up with the old count. Market school exposure was at 0. I got to check to see if they changed it when Justin upstates that. Leaders, we already talked about that. Oil and gas, those have been hit. Still a distribution dominant tape. High-low indicators are still red. You know, if we get in a good uptrend, we need to have more highs than more lows each day. Still in a power outage, and moving average line, still a lot of work. Sector leader list is just at 3, IPO leaders at 2. Growth 250 was slashed to 134 last weekend. It's 149 this weekend. So still seeing a lot of damage. So I'm going with the maybe button because of that follow through day. And this week, hopefully will sort of tell us more. So certainly want to proceed with extreme caution, discipline based on all of that. We definitely don't want to feed the bears if we start getting ugly again. Don't want to give up fiscal capital, don't want to give up mental capital, because they're going to take it all and come back for more. So our advantage is to be not invested, so we don't want to squander that. And again, going back in slowly is a corollary of that rule. Things to watch: are we going to get a bigger third leg down or even a fourth leg down with capitulation and fear? We still haven't seen this. The VIX hasn't spiked, put call hasn't spiked. General public sentiment hadn't spiked to the negative. It's showing up a little bit, but not yet. So I mean, we're looking for the VIX to spike to like 40, put call to put in a big spike. We don't have the prior tech growth leaders. Those have been hit. So average bears 9 months long, we're 7.25 months in. Near the end of August would be 9 months, but we've been studying in our monthly meetings the financial crisis bear and the dot-com bear. So these were both much longer bears than 9 months. We're still in the dog days of summer, low volume, higher volatility. And which groups can you find stocks forming basis is what we want to pay particularly close attention to, and we want to see what stocks will be the next leaders. It is not going to be the prior leaders. We're not going back to DocuSign, Zoom, Peloton, Shopify, Spotify, whatever they were, for the leaders in this next group. There's 1 in 8 of those may come back, but we're looking for new names. And you can see that in the group teaching portfolio. We have Halo and BYDDF. And so most people don't even know those names yet. So we'll see if those can become leaders. And we're getting ready to hit earnings season again. The last one was absolutely brutal with gap down after gap down after gap down, bigger than I really ever recall seeing it that bad. So starting about July 10th, July 14th, somewhere in there, we'll see what sort of reactions we get, because earnings season, as Amy Smith says it so well, it's often a catalyst for the market, and it can be a catalyst up and it can be a catalyst down. So we'll see where we go. So we'll look at a couple charts. Go to Market Smith. I loaded, yeah, I got a couple loaded in here. So Lee, this is one of the Chinese automotive, looks very extended, but just look at the strength, look at the volume coming in, look at that RS line. So we're seeing some strength there. BYDDF, we already talked about, same group. China EVs, this car already sells more cars than Tesla in China, and soon it will sell more than Tesla sells worldwide. Very big company. So setting up, they do sell some hybrids. They're not pure EVs like Tesla. They do both. So we'll see. And a cup with handle. It's a deep base, 48% deep. So it'd be nice to see it go sideways a little bit here, maybe form a nice handle or something. And then Halo, some medical stock setting up. This is a potential flat base. It's about 13.1% deep, not quite 5 weeks long. You have some early sloping trend line and horizontal trend line potential entries to study. Harmony's another medical one, so it's broken out, extended, but where are we seeing strength? Merck, another medical, broke out, failed, round tripped, now coming back and in that original buy zone. Solar, EMPH, this one's the New America article this weekend in IBD, so go read that. A lot of strength in there. And if you don't like all the volatility in solar, you can look at the ETF, which is TAN. So those are some things to keep an eye on, some areas, do your weekend routine, watch list, things to watch. I mentioned last weekend the Ali Quorum interview with Dave Ryan. Jim Ropel was on IBD Live this past Friday, so you can go watch that if you subscribe to it. You can see the recording. And then go back to the IBD Investing podcast. Ropel's been a lot of those. Jason Thompson was on there recently, Richard Moglin. A lot of good educational guests on that IBD Investing podcast. And then our monthly meetings, here's everything we covered in June. We spent a lot of time. We walked through this bear market day by day, almost in detail there under number 6. And we talked about EV space, which I said we'd kind of look at every month this year when we do our big meetings. So you can see what we went through there. Our next meeting's Tuesday, July 14th. Look at the M factor, cover some more IBD Live and Market Smith tricks and tools. We're going to go back to that financial crisis bear market, and we're going to overlay some of the new events and the Fed moves, rate cuts, rate hikes during that time period. And then we're also going to look at the setups, what stocks were the first out of the gate, the new leaders coming out of that bear market. We're going to look at some of those charts and see how they did. We'll look at EV space and cousin stocks again. We'll look at the group teaching portfolio, IPO market, if it ever comes back, and we'll do open mic Q&A. And then all our meetings are recorded. So if you ever want to go back and study any of these, I mean, you have the recording if you attended live or registered at that time, but those 3 from January, February, March of 2021, when we're in a bear market, it's a great time to write your set of sell rules if you don't have them. And then your weekend routine, there's 2 videos in September and October. How to handle EPS season was in August, big discussion of that. So you can just send me an email about ordering prior webinars. Those are $15, includes the recording, the slide deck, and any other links that I sent out at that time. And of course, you can join the 2 meetup sites, Greenville Eastside, Stockyard. A lot of resources on the Greenville Eastside site under the More tab and message boards. And then you're on the YouTube page, so like and subscribe while you're there. And then there's other videos. There's one in there on bottom versus bottoming bases, the difference between the two. One is viable in Canslim, one's not. So I went over that in detail. So that's a good thing to be watching now, particularly in this market. So that's it. Hope you have a good week. I think this week will be very interesting. I mean, it may just be trendless, it may just go sideways. We'll see, because last week sort of started out that way, just wishy-washy, and then had the follow through day spurred on by the Russell rebalancing. So that's it. I'm out of here. Have a good weekend routine.